If you have been on Nigerian financial Twitter or WhatsApp lately, you have probably seen it. A PDF document seemingly official detailing the exact term of the most anticipated stock listing in African history. Yes, the Dangote Refinery IPO. Within hours of that document going viral in late March 2026, the refinery management did something that caught many by surprises. They issued a forceful categorical denial. They called the report unverified, inaccurate, and unauthorized. But here's the twist. Just 5 weeks earlier in February, Aliko Dangote himself stood in front of camera and told the world that Nigerians would be able to buy shares in the refinery within 4 to 5 months. So what's really going on? Is the IPO cancelled? Or is this a sophisticated defensive move to protect you, the investor? Today, we are decoding the denial to separate fact from fiction. To understand the present, we have to look at the timeline. On February 21st, 2026, during a high-profile tour of the refinery with the NNPCL leadership, Aliko Dangote optimistic. He projected a listing window that points directly to June or July 2026. This wasn't a random guess. The refinery had just reached full potential operation capacity. It was already exporting fuel to 5 African nations. The paradigm shift was real. Fast forward to March 27th and 28th, 2026. Suddenly, the purported IPO document appeared on social media. Management's response was immediate. Disregard speculative commentary. At first glance, it looks like a contradiction, but in the world of high-stake finance, this is actually a difference of regulatory protocol. While a founder can share a vision, a corporation cannot legally allow leaked documents to dictate the terms of multi-billion-dollar transaction. Why would a company deny something its owner practically promised? There are 3 critical reasons to that. First, preventing front-running and gray market. When unauthorized documents circulate with fake prices, it creates a gray market where people try to trade promise of shares at inflated prices. By denying the document, management shuts down these unofficial trades, ensuring everyone starts on a level playing field once the real IPO begins. Second, the quiet period. Regulators like the Security and Exchange Commission and the NGX have strict rules. If a company is moving towards a listing, they must enter a quiet period where they cannot make promotional statements that might artificially pump the stock prices. Third, the sanctity of prospectus. The refinery management explicitly stated that official updates will only come through formal public disclosures and appointed advisors. In a real IPO, the only document that matter is the prospectus, which is a massive, legally binding filings that must be approved by the SEC. If it's not a prospectus from the official advisor, it's just noise. This denial is even more important because we are currently in a crisis of misinformation. While legitimate rumors were swirling, malicious actors were busy. The SEC recently warned of AI-generated scams using deepfake videos of Aliko Dangote to lure people into fraudulent platforms like CBEX and Silverkuun. The refinery's management had to be forceful. If they weren't crystal clear about what wasn't official, an investor might easily make a scammer's money doubling platform for the actual IPO. Remember, Dangote Industry confirmed that its top executives do not operate Facebook or TikTok account, and they never solicit funds via WhatsApp or Telegram. So if you're an investor waiting for this historic moment, the listing of a refinery potentially valued between $20 billion and $50 billion, how should you prepare? 1. Watch the advisors. The Dangote Group has already appointed its leads: Stanbic IBTC, Capital Vertical, Capital Management, and First Cap. If the news isn't coming from them, verify the news. 2. Verify on sec.gov.ng. Use the official SEC Nigerian website to search for licensed operators and approved filings. 3. The dollar dividend factor. One of the most unique parts of this upcoming IPO is the proposal to let you buy in Naira but receive dividends in US dollar based on your option. This is a major edge against currency volatility, and the final details will be in the official prospectus. 4. Understand the listing. It's likely to be a dual listing on both NGX in Lagos and the LSE in London. This means global eyes are on this deal. Don't let social media rumors distract you from the institutional grade reality. In summary, the late March denial wasn't a signal that the refinery isn't going public. It was a signal that the refinery is protecting the integrity of the process. Management is navigating a policy war regarding fuel import and crude supply. They are battling AI-driven fraud, and they are preparing for what could be the largest listing in African history. When the time is right, the official statement will arrive, and it will be backed by regulatory filings, not viral PDFs. Until then, stay skeptical, stay informed, and always verify through official channels. What do you think about the proposed buy in Naira and in dollar model? Drop your thoughts in the comments, and don't forget to subscribe for our deep dive into the export threat controversy coming up next.